I have details of the Fed's plans to reduce its balance sheet. In general, the Federal Reserve participants in the meeting agreed on a $95 billion monthly runoff of its near $9 trillion balance sheet. The Federal Reserve agreed to balance sheet reduction of $60 billion in treasuries and $35 billion in mortgages. In fact, these are actually caps on the amount they'll allow to run off, but it's what they're essentially aiming for. They agreed to phase in those caps or that amount over a 3-month period, or modestly longer, they said, if it's warranted by market conditions. The Federal Reserve saying that members are comfortable with high monthly caps or even no caps, but they decided on at least some caps in this case. Many participants preferred 50 basis point increase at the March meeting. However, they did not do that due to the uncertainty surrounding Russia's invasion of Ukraine. Prospectively, going forward, many participants see one or more 50 basis point rate hikes they say could be appropriate at future meetings. The Fed will move more towards a neutral policy, it says, quote, expeditiously. A little bit more on the balance sheet here. The Fed will consider the sales of mortgage-backed securities after the runoff is, quote, well underway. This is part of the Fed's ultimate goal here to aim for a balance sheet primarily composed of treasuries. You'll remember it bought treasuries and mortgages as part of its quantitative easing. It wants to, as fast as possible, get rid of those mortgages. Fed saying it will continue a, quote, ample reserve framework. That's a fancy way of saying it's going to leave a lot of reserves in the system. Probably not going back to where it was before it started QE during the pandemic. Rather, it would be something above the 4.4 or 4.2 trillion where it started. Finally here, let's see, one more thing here. There's going to be, it's a very technical thing, but there'll be a different regime for running off the very shortest treasuries, which are the treasury bills, under a somewhat different regime. We'll use those to kind of backfill the monthly caps. It's a technical thing, but I know that the fixed income market wants to hear that, Kelly. So to recap, $95 billion will be the monthly caps on the runoff, about double what it did in 2017, a much more rapid pace. And the Fed very seriously considering 50 basis point rate hikes. It did so, by the way, at the March meeting, thinking they would be appropriate at one or more future meetings. Kelly?
Shepard Smith here. Thanks for watching CNBC on YouTube.